Yes, yes, yes. What's going on, family? Hope you can hear me and you can see me. Put some tens in the Powerhouse YouTube if you guys can see me, hear me, and everything's looking and sounding good. I was just getting the camera set up. I'm really excited to be on today's crypto and assets call. We host these every Saturday, myself and Gil, and really the goal is to give you guys game on the fundamentals, the technicals, and the sentimental perspective of where we are in the market. We want you to join these calls and to leave these calls knowing what's the next step, knowing, okay, I understand a bit more about how crypto works, how to build a portfolio, how to invest in stocks, why I should invest in stocks, how to look at a chart and understand the technical side of things as well. So this is not only for traders, this is also for investors. This is not only for investors, this is also for your everyday person looking to get into the market. So I'm going to go ahead and share my screen and we're going to start this call off as we always start, which is what's going on in the current market. Now, I always dive into the recent week's news and fundamentals. And the reason why is because news is the excuse. That's a phrase that we use sometimes, basically means news is the excuse to move the markets to where they were inevitably going to go anyway, from a technical aspect. And so we'll talk about crypto, but we'll also talk about stocks. And here's just a couple of news items for the past week, all the way from last weekend to this weekend, Saturday. And so the first thing I want to mention is 11 firms got conditional OCC national bank charters in the past 90 days. So sounds like a very wordy thing. I'm going to break that down a little bit. All it simply means is that the office, I'm going to show you guys OCC national charter, what that really means and what that is. The Office of the Controller of the Currency. It's a bit of a wordy one, but basically they have gave approval to 11 crypto-based companies to say, hey, you guys are on the path to becoming a actual bank. You're on the path to having banking license, just like all of the other banks out there in America, such as Chase, such as First United, and all the other ones. And so I was diving into an article that was speaking about this, and I found it quite important because the companies that got this approval, they are Circle, Ripple, BitGo, Paxos, Fidelity Digital Assets, and many more. And that's interesting because the argument is banks are going, hold on a minute, like, why are you giving these crypto-based or focused companies the same benefits, the same regulatory framework as us when they don't provide the exact same services? So what's happening is banks are actually saying you should be tougher with them. They should have different regulation. They should have more diligence because they shouldn't be allowed to conduct the same way that we operate as a bank. And that is the opposite end of the argument when it comes to giving them licensing. What does it mean for us as investors? It's a positive. It means that there's more adoption and there's more of a regulatory framework for these massive companies that are crypto based. And long term, that is an amazing thing. Don't get me wrong. I don't know how long you guys been in the market, but I first started in 2021, 2020. And back then, we benefited off of early adoption. We benefited off of the majority of people and institutions not being involved in the market. That allowed us to get extra low prices with investments and hopefully to hold those and benefit from a higher ROI. We don't really have that benefit now in 2026. We do with some projects, but now more institutions are involved. There's a much larger injection of money being flowed into the market. There's more regulation. The large institutional players in the traditional world, they're invested into companies that hold Bitcoin or hold crypto, ETFs in Bitcoin, Ethereum, Solana. They've been growing extensively. So now the market has trillions of dollars worth $3 to $4 trillion within crypto. And so that just brings less volatility and a little bit more stability. That's the difference. So moving on to the next news, stablecoin market cap hits an all-time high of 320 billion. We've been speaking about stablecoins for a very, very, very long time, actually. We basically, I wouldn't say like predicted, but we basically mentioned that this was going to be one of the big players in the coming years. And the reason why is because it's a very simple way for banks or institutions to benefit from yield. Very simple way. I mean, from a consumer perspective, how attractive is it? As you're holding money in its stable coin, which is pegged 1-to-1 with the dollar. So simply, if you have $1,000 in USDC, for example, a stable coin, whether Bitcoin goes up or down, that USDC stays the same. The value that you have there remains the same. It's a safe haven for your funds. And then when crypto falls or we're in a recessionary environment, you can then transfer your money from stable coins and put it into the market. That's how it works. But stable coins have been a big player, and many companies have been producing their own stable coins. And the reason why is because of three main acts, three main legal frameworks. We have the Genius Act, we have the Anti-CBDC Act, and we also have the Clarity Act. Those three acts that are being spoken about, and two of them have been passed in government. That's what gave companies the confidence to be able to create their own stable coins, which is great for the market. Now, what do we recommend, guys? If you're on this call as a beginner, we recommend USDC. You have DAI, you have USDT, you have Paxos, you have other stable coins out there. But in our opinion, Circle is behind USDC, and we believe that's one of the most safest ways to hold your funds, store your funds. And you can do that on an exchange. Of course you can, right? Centralized or decentralized, or you can do that on a ledger or a Trezor in a hardware wallet, cold storage, which is a little bit more of a protective measure than on an exchange. And that's simply because you own what you have in that hardware wallet, in that cold storage. You have your private keys. You basically have your password. But when it's held on an exchange online, you don't have your private keys. They have ownership. Depending on the exchange's TOS, their terms of service, because it does depend from exchange to exchange. So stablecoin market cap has hit an all-time high. Honestly, I'm not surprised. I'm really not, because of how many companies created their own, but also because of the environment we're in crypto now. I'm sure there's a lot of people that are holding money in stables, waiting for lower prices. I'm sure Gil's going to go over the charts, but looking at where Bitcoin is right now, we can go into the mid 60s pretty easily, and the low 60s. So considering that, I think it's a good thing, and it's a reasonable thing to have a percent, whether it's 30%, 40% of your funds in the stable coins ready to deploy into the market for lower prices. One of the biggest mistakes I made, guys, as an early investor in the 2021, 2020 space, is not having spare capital to the side to dollar cost average at lower levels. That's one of the biggest tips and biggest keys I can give you guys. So Ripple is the company behind XRP, and we know XRP. Many of us secured the bag from XRP in the past few years from a leverage trading standpoint and an investment standpoint. And XRP allows for cross-border payments between banks, and they're already operating in a bank in South America, I believe. And so the company conducted a $750 million buyback, increasing its valuation to $50 billion. So I don't know if you guys remember, but in Q4 last year, I want to say October time, they actually valued the company at $40 billion. And now the valuation goes up to $50 billion. So this company is just growing exponentially. Now you're probably asking yourself, what is a buyback? Like, what does that mean? This is a stock term, I guess you can say, in the traditional world. Basically, you have XRP, which is here. Then you have Ripple, which is the company behind XRP, funding XRP, functioning behind XRP. And then what you have is you have many investors within Ripple. And so Ripple, a buyback is where the company is actually buying back their own shares. So I'll give you guys an example. Let's say a company has 1,000 shares, right? 1,000 outstanding shares. And if we go to, I'm actually going to demonstrate here. If we go to CoinGecko, and I'll show you guys what I mean by this. CoinGecko is where we look at different crypto prices. It's basically the Yahoo Finance for crypto. And if you go to the left, which is the tokenomics, this is the numbers behind the project. And you'll see where it says max supply. You see that? You see that number? Max supply. And I believe that's 100 billion. Then you have this circulating supply. It means what's in circulation, what's moving around in terms of the number of tokens. But then there's that difference, isn't there? From the max supply to what's circulating and then also the total supply. Well, all that's happening is when a company buys back their stock, they're not increasing the max supply. They're not even decreasing that max supply. All they're doing is actually buying back outstanding available shares. So what happens is that, let's say you go from 1,000 shares within a project and the company decides to buy back 200 shares. Well, now there's not 1,000 shares available. There's only 800 shares available because 1,000 minus 200 is 800. And if there's less shares available within a project, that effectively increases the value of all the shares that the people had already. Because let's say this, a company has 1,000 shares and you own 100 shares of this project. You own 10% of the project. But then the company buys back 200 shares. That means it's gone from 1,000 to 800. That's a 20% decrease. Well, hold on a minute. Your 10% stake, 10% of 1,000 is 100. Now there's only 800. You still own 100. So your percentage is now 12.5% ownership instead of it being 10% ownership. So the percent of the share that you have within the project has actually increased. And this leads to an increase in price. That's a difficult concept to understand. But think of it as supply effectively decreasing, which is increasing the percent that you own within the project, which is increasing demand, which is increasing price. So this buyback is a positive thing. And what it tells investors, like if I had an investment in XRP, in Ripple, that tells me that the company is bullish on its own company. That tells me that the company is actually wanting to buy back what it already owns because it's that bullish on where it's going to be in the next 1, 2, 3 years. So this is a very, very good sign. And just think about it from a non-economical standpoint. If I own a project, it could be in an NFT space, whatever it is. And if I don't even own what I'm owning, right? If I don't even own what I'm the manager of or the founder of, then isn't that a little bit of a red flag? Like that's a little bit like you want people to buy and sell your stuff, but you don't even believe in it yourself. Well, when companies do buybacks, it tells me that they believe in it themselves. And that's why they want to have a stake. They want to have an investment within the project because they think it's going to go up. So that's a difficult concept. But I wanted to introduce to you what a buyback is because it happens in the stock world a lot. And it also is going to start happening in crypto a lot as well. In fact, we did that in the NFT space when I was managing a Solana NFT project back in 2022, guys. We bought back our own NFTs, our own supply. And it was funny because investor sentiment changed. Investor sentiment was like a 3 out of 10. The moment we announced that we're buying hundreds of our own NFTs, it went from a 3 out of 10 to like a 6 out of 10 because investors were like, wow, like the community manager, the developers, the founders believe in it, that they're putting their own dollars to buy back what they already own. Yes, like I want to buy more of those NFTs. It's the exact same concept, just with companies. So next 3 points, over 85 crypto firms join MasterCard's partner program. So we mentioned on last week's call about Crypto.com's debit card, the card that is going to allow you to get tokens back and a percent in yield. So we've seen MetaMask do this as well. And MasterCard, they're kind of keeping things vague, but they're saying, hey, like we have 85 crypto firms who have joined our program to say, yeah, we're down for this initiative to increase the use case of digital assets. And the companies include Binance, Ripple, Circle, PayPal. What does that tell me, guys? That tells me that you will see more MasterCard crypto-based cards being launched from these companies. MetaMask will not be the only one. Crypto.com will not be the only one. We might see a Kraken. We might see a Binance. We might see PayPal. And so this is a very, very good thing, because another stat that I looked up, which was about real world assets, is real world assets market cap has now hit $22 billion. It's just been increasing year on year on year. And real world assets, in my opinion, is one of the most growing industries in the crypto space, because you're connecting the physical item, like the actual utilization of this digital blockchain world. You're bringing the two worlds together, and for the everyday person, that actually makes sense. People say, like, what is crypto for? What's the point of it? How can it benefit my life? Well, real world asset initiatives are exactly how you bring that forth. So you're talking about crypto-based debit and credit cards. You're talking about crypto loans. You're talking about real estate tokenization. You're talking about art piece tokenization. Like, this is the real world stuff that gets a lot of people excited. So look out for more of these cards. This is something that you can definitely benefit from. And you got to ask yourself, well, if I am spending this cash anyway on a debit card, or if I'm to use a credit card, why would I not use a credit card that's going to give me back crypto tokens instead? Because that's an investment which is going to appreciate over time. Plus, I get the APY on top of that as well. I see two benefits there, which is pretty cool. Yeah, we spoke about this. So NASDAQ, Kraken, partnering for tokenized stocks in 2027. Tokenized stocks is something we've mentioned for a long time. NASDAQ is one of the exchanges in the US, like the New York Stock Exchange. We spoke about how they're looking to go to almost a 24/7 market to compete with how crypto is 24/7. You can trade it on a Sunday morning, you can trade it on a Monday night. And due to that competition, that's what they want to do. But tokenizing stocks will become more and more and more popular. And so Kraken, it looks like they've partnered with NASDAQ to set this up for 2027, which is going to be really, really cool. And I think what this does is exactly what it says. It kind of modernizes the process of buying and selling stocks. And yeah, it brings a TradFi world combined with the decentralized world. So this is going to be an interesting play, because we're going to see more people in the market, and also we're going to actually see institutionalized investors investing into tokenized projects, which is very exciting and just brings more money into the market, which is great. The last thing here is prediction markets are on the rise. Now, put a 10 in the chat if you guys have heard of Polymarket, if you've heard of Cowshy or Cowshy. These are prediction markets. These are, some of them, sports betting companies, which has only been growing and growing. And you got to ask yourself, like, why? Why are prediction markets on the rise? Where, for those of you who don't know, and this is an interesting article about it, but basically prediction markets allows you to bet on the outcome of a certain event. It's exactly what it says here, right? A real world event, you can actually bet and say, hey, I think Ryan Garcia is going to beat, I don't know, well, it's never going to happen, but it's going to be Floyd Mayweather, for example. And so because of that, I'm going to put $100 and bet that he wins. And you've got other people betting that Floyd Mayweather wins. And you've got that differentiator. And so your bet for Garcia to beat Floyd Mayweather in boxing, you might get like a 2-to-1. You know what I mean? You might put in 100 to make 200. Or obviously, if you lose and Mayweather wins, you lose 100. So this world has been increasing. Why? A couple of reasons. Number one, younger people are willing to risk more. Younger people have a higher appetite for risk, 100%. Number two is that the sports industry, the entertainment industry, has been growing year on year, undoubtedly. More and more people and companies are getting involved with sports from a media perspective and also from a consumer perspective. And then the third reason is that trading and investing has been popularized. You guys got to think about this, is 10 years ago, leverage trading was not a common concept. This was not an easy thing to get into. It was not a cheap thing to get into, and it wasn't even accessible. Like, for you to become a trader 10 years ago, we forget, guys,
People had like box laptops and like box computers, with a whole big monitor, and the internet was only 10 years in the game. But now more and more people are trading. We can go on YouTube and see that, Google and see that. Within Zenrai Powerhouse, we have a community of thousands of people worldwide who are traders, spanning from the age of 18 all the way to the age of 60. So that popularization, those three reasons are why prediction markets have been increasing. And so what does this really mean? Well, I look at this from an investor perspective. I look at this like, okay, maybe I'm not a better. I'm not really into the betting stuff, but how can I benefit? Let me look at the companies in the prediction market space. Let me look at Kalshi. Let me look at Polymarket. Are they publicly traded stock? Yes or no? Oh, yes. Okay. Well, let me look at their finances. Let me look at Polymarket's revenue recently. Let me look at Polymarket's revenue from 2021 to now. Like, has it been growing? Is their cash flow positive or negative? These are the questions you want to ask yourself to know whether or not it's a good or a bad investment. And so the last thing I want to mention as I'm mentioning companies, I wrote down some IPOs for 2026 that might happen. I don't know if they're going to happen for sure. I don't know if they're definitely certain to be this year or if it's going to be next year. But an IPO is an initial public offering, guys. All it is a stock going public. And so once the stock's public, you can then invest in that. You can then buy a share in that. And if you go to Yahoo Finance, this is good for anyone who's like beginner coming into stocks. Maybe you're 18, 21, 35. It really doesn't matter. And you're like, hey, like I want to invest in stocks. How and where? We can touch on stocks all day long, to be fair, but we'll do that another time. And if I just go to like Apple, for example, or actually Circle, that's a better example because this is the company behind USDC, the stablecoin. And Circle went public in the summer this year. And let's look at their chart. They went public. They went all the way up to $185 or so, almost 190. Let me see. Closed. Yeah, okay. So like, mid 180s. And right now it's at 115. But this company Circle, guys, on Yahoo Finance, you can go to the financials here. You guys see financials? You can go to financials and you can have a look and check out their numbers. And this might look confusing, but TTM basically means today current. And you can go right from 2023, like, has their revenue been growing? Yes. Their revenue was 1.4 here and now it's 2.7. So their revenue basically went up 80% in 3 years. Okay, good stuff. You can also go to, it's not on this side. You can also go to cash flow. And you can go, okay, like, has their cash flow been growing? And then you look at free cash flow on the bottom. Well, since 2023 to now, yeah, their cash flow is 3 to 4x. Like that's a huge increase in the cash that they actually have on hand. So these are the stuff that you can search and look into, guys. And so I mentioned Circle because they went public. So they became a publicly traded stock in summer 2025. And many of us were aware of this. Now, imagine being able to invest in a company as soon as it goes public, and you can then benefit from, number one, being one of the early investors in it. But number two is if you're in a company that is sizable and it's growing, well, you might be early doors compared to everybody else. And I want you guys to be ahead of the game. So I wrote down some IPOs for 2026. If you have your phone out, take a screenshot, or if you're on your laptop, and consider these for this year. Because when they IPO, I'm not saying as soon as they IPO, you invest in it. But pay attention. Put this on your watch list. Because typically, it IPOs and the price starts high and then it decreases after. So you want to be patient. But this is something I want you guys to keep an eye out for. So these are the companies which I'm keeping an eye out for 2026. Ripple, XAI, SpaceX, OpenAI, Anthropic, Kraken, Stripe, Databricks, Canva, Discord. Now you might ask yourself, okay, what's the commonalities between these cryptos? Between these companies, these stocks. There's some commonalities here. Most of these projects are in the tech AI data space. Why do I say that? Because in 2026, this current market, what is popularized when it comes to investing? Well, in the crypto world, we're talking about real world assets. We're talking about data and AI management based companies, oracles. We're talking about derivatives. Now, in 2021, 2022, 2020, what were the industries that were booming in crypto back then? We're talking about gaming. We're talking about Web3 and NFTs. We're talking about those like low cap, hyper sentiment focused projects. It's the best way I can put it. And so nowadays, the industries that are popular has changed, and we need to adapt with those times. So XAI, Elon Musk is the founder of X, and also is one of the main players in XAI. It's tech-based. SpaceX, same thing again. Elon Musk is the guy behind that project. OpenAI, basically the #1 AI protocol. Kraken, one of the biggest crypto exchanges in the world, with an incredible CEO who truly believes in the crypto communities and adoption. Stripe, global payments. Databricks, then again, data for AI companies on analytics. Canva, that's something that and we use to even create this presentation, has a massive high user growth and subscription model. And then we have Discord, which the Powerhouse community utilizes well. And Discord are also expanding how they can monetize things, because there's many different ways. So if you look at these 10, there's similarities. And I want you guys to keep an eye out for it, because these are going to be huge opportunities in 2026. So that was my section, family. Went a little bit over, but I think it was very important to go over some of those topics. And put a 10 in the chat if you guys got some value. You feel like you learned 1 or 2 things. These are companies which I'm really excited about, to be honest. And, you know, having exposure to them is good. I just want you guys to keep an eye out that this is not something to over leverage in. It's not something to put 50% of your portfolio in, because whenever a stock IPOs, there's always a level of higher risk, regardless of how large the company is. So keep that in mind. But Gil, I'll pass it over to you, brother.
Yes, sir. Yes, sir. Yes, sir. What's up, guys? I appreciate you guys for, tuning in so far. John Luke definitely broke down a lot of amazing things. I think the whole IPO list was pretty dope. I think there's some very highlighting companies there for sure, that even I use on a day-to-day basis. And now even within Powerhouse, we actually use, which is super dope. But now I'm excited. Bro, I appreciate you for breaking that down. Always some great info. Like, let me know in the chat box here on YouTube. Put a fire emoji if you learned something you didn't know. That is honestly the objective of every single Saturday on these sessions, to give you guys something new, something different, and even just a reminder on kind of where things are at, where they're going, and really what's coming next. And I really think that, looking at those IPO companies as a whole, even just that part, is next level. And just being aware of those things is super crucial. And we'll talk about some things as well, but I'm going to go ahead and go into straight to the charts. The first thing I want to talk about, actually, just kind of since it's crypto and assets, right? I did want to talk about kind of the pump we've seen in oil, right? This pump that we saw in oil, and there are some pumps that happen in certain cryptos that go correspond to what's happening in the world as well. But this is something that's definitely has been shown. I don't see this like lasting. This could kind of continue. But one thing that we also saw pump, just for the crypto degens out here, is Trump coin. We saw Trump coin. We saw Trump coin create a move, and it's wild because this always happens when it's associated to Trump as well. So obviously everything with the war and everything there. Yeah, bro, it pumped Trump 50% pump. Yeah, so a lot going on. Right now, crypto as a whole, it's pretty stagnant. Last crypto and assets, I talked about how I wanted for this to happen. I wanted for the markets to actually come lower, below this wick right here, below 60K is what I'm still looking for. Again, right now it's not showing strength on the upside, so it kind of aligns with that for sure, because it came back here and it didn't stay up here, right? It rejected. So I personally believe, even for portfolio, I believe that Bitcoin can see something like this before it would want to see something like that. So it gives us a lot of time as an investor, to look at the markets, be patient, and just know that things are going to move when actually you least expect it. At the end of the day, when people expect it, that's when things don't happen. When you don't expect it, that's when things start to happen. But all these other cryptos are going to look very similar. When you got BTC, you got ETH, same kind of thing. I personally see it coming below this wick of 1745. I think it's going to be a really good timing in the market when that happens. And, I really could even see potentially Ethereum 1300, around this area right here. Yeah, I see it taking a lot of liquidity here. If it doesn't want to stick here, it will come here at the end of the day. So I definitely do believe that something like that could happen, but we'll see. At the end of the day, we don't know exactly. We just have to follow structure of the markets. And then you have other cryptos, right? Things like Uniswap, you got Chainlink, just holding, right? They're holding pretty solid. One thing about the altcoins, mostly like the strong ones, when BTC goes down, these will go down, but they're not going to go down as crazy. They're already kind of just doing their thing, holding their ground. I could see same thing here, Link going under this wick. If BTC goes under the wick, I see Link go under the wick. It don't think it's gonna last too long if it does, to be honest here. But I personally could give a lot of good opportunity, right? So if you're looking at your portfolio, this is the time that you could start. If you want a DCA, at the end of the day, DCAing is daily cost averaging, right? You're getting in at different price points. So if you want to get in something like this, like Ethereum, around this, and then if it comes lower, you want to buy again here, and then it comes lower, you buy again here, right? You're positioning yourself. So there's different ways to go about it. That's something that you can do. Personally, for me, I do want to wait to see kind of what's going on, what's going to happen in this area again. For example, BTC 60s and below, before I really start looking at market structure and what it wants to do. But that's kind of what I'm really looking for with everything there. So if you're looking at your portfolio, that's really what I see. Now, even just going straight to stocks, there's some good opportunities lining up. As you guys know, I've been talking about Netflix for a minute. I was talking about it coming to the 70 area. It made a crazy jump after Paramount actually decided to buy Warner Brothers and not Netflix. So they have a lot of cash flow, which is good for the books. But I can see this coming back here, at least in the 80s area. Personally, anything in the 80s area, I will be taking action on this. So even if it comes lower, that's fine. I just think there's a lot of potential with Netflix. Netflix is an A-rated stock. So if you go to like the Yahoo Finance website, right? Depends how you look at it, but we have a very simple way that we've learned from one of our educators, Patrick Kenny, on what we look for and how we grade things. But Netflix has really good numbers, right? Has really good numbers, doing a lot of good things. I mean, they're doing some live streaming. They're live streaming the NFL this past season. So a lot of different things that they're doing. Obviously, they're one number of the top streaming platforms as well. But if you just go to financials, you can really see what their numbers are. To look at their total revenue is growing, right? Overall, it's been growing. Recently, it's also been growing. Okay, then you go to the cash flow. And you can say, okay, well, cash flow is also a positive number, and it's been growing overall, and it's been growing recently. Obviously, now that the fact that they didn't have to buy Warner Brothers, or they didn't buy Warner Brothers, their cash flow is going to be, good. And that is really a big reason why this pump is. So really any pullback, I personally think in your stock portfolio, this can look really, really good for you. I just think being a part of the streaming, I really believe that the TV as a whole is changing, right? It's not going to be cable anymore. It's literally going to be all these live streaming platforms are going to have rights and have partnerships with, like the NFL, and it's already happening. A lot of the soccer games right now are being broadcasted on Peacock in the UK, for example, right? So like if you have Peacock, you can watch the Barclays Premier League games as well. And, if you guys don't know, they're actually owned by like NBC. There's like an NBC company. Forgot the ticket for it, but yeah, that you can be a part of that. So it's like being a part of the streaming side, the live streaming, which is basically going to be cable now. I think is a good opportunity. And there's other plays. I think another good play is also, a lot of these are going to look very similar, which is good. It's just kind of showing you that there's opportunity, right? Like Block, for example. Block is something that I believe it's gonna have a good opportunity. All these wicks, I don't know. The more that it stays here, the more that I think it can actually take these lows. So can we see block even under $50? I mean, maybe, maybe not, right? But just that's a rule of thumb. When you have in that bigger time frames, right? When you have something like this stay here for a bit, it creates something called liquidity, right? Liquidity is just money. It's just like, people been buying here, people been buying here, people been buying here. And big players like to take out that money before they enter themselves, right? Most of the time, and if you really just go back in time, when you have a big move in stocks or really in anything, it's usually a quick move. Like, look at this, right? Look at this, you have consolidation, consolidation, consolidation for like 2018 to 2020. That's 2 years. And then what happens in 1 month? Obviously, this was COVID, right? In 1 month, we have block go down, take out all these lows, and then what happened? Boom, a pump. Like put a 7 in the chat here on YouTube if you can see what I'm talking about here. And that's why when I see this, I like to stay patient and I like to wait for liquidity to be formed. So can we see liquidity be formed on something like block, have a quick bump down and then push up? And there could be a lot of catalysts, fam. There could be news. There could be I don't know, things with war. There could be so many things that could prolong this, but also pump it depending on it. Now, another one like this is also PayPal. I don't know. I kind of been hearing a little bit that maybe, I don't know if it's a rumor, but maybe Elon is looking to buy back PayPal if that was to happen. I mean, I feel like that could be a catalyst to move this. But there's a lot of opportunity here. PayPal is actually wanting to become a bank currently. They want to get like the certifications and the rights to be like a bank. Like imagine instead of going to Bank of America, going to Chase, you go to PayPal, you deposit your money, and they're gonna want to be offering higher interest, right, for your money. So that's a game that these banks are playing, by the way, that people or these banks are having to get aligned with, is paying higher for your money, which for us, it's right. It's a good thing, right? There's competition for that. But that's something that's to be very to look at, really. And there's some companies even on the crypto side that I can't even bring it up today, that are already getting in position to be paying 9% of your money and have protection on it. And that's going to be super crazy. So PayPal, I think, is going to be a good opportunity. I personally like it anywhere in the 40s, 30s areas, has good opportunities with it. Another one that I'm really looking at as well is Nike. Nike is looking to, it's just pumping. It's pumping down. And Nike is Nike at the end of the day. They just hired a new CEO. So I like when a good project, something that like you use, something with stocks is something you can ask yourself that you use it, right? So when you use something, then you're like, okay, cool. Like I can see that everybody else is using it because I'm using it. The stores are still packed, right? Like, they still have partnerships. And with the new CEO, actually, he used to be a part of Nike whenever the Michael Jordan era. And he believes in athletes being the front end of like Nike. And that's something that Nike kind of lost a little bit. They've lost a little bit to competition, but they're looking to kind of get back up. So the fact that it's pumping down, it's going down, I don't know. Could these take these lows? Could we see, this would be a really good steal, but could we see Nike, around the 40 areas? Like, could we do that? Could we see that? Maybe, maybe not, right? And then another one, shout out to John Luke for talking about IPOs. There was an IPO that came out in 2025, and that was Circle. If you guys don't know what Circle is, they actually own they run USDC, right? So if you want to be a part of the stablecoin world, which I think in crypto that's going to be the most profitable thing, honestly, then you can invest in something like Circle. They're a stock. They're publicly traded company now. And the thing is, they came right before they came below the IPO price. That's something that we learn a lot in our platform with our educators. I've been doing this for over a decade. Is that if you're not in here, you don't want to catch this FOMO, because most of the time, every single IPO, the market usually pumps. Then what? Retraces below the IPO price. This is where investors got in. So again, it's smart money at the end of the day, right? That's kind of how everything is really worked in the back end. And that's why Circle had a great opportunity around the 60 areas. And I can see a pullback if it wants to give it to us, which it doesn't have to. It can just go crazy. But can we see Circle at least under 90? It could be a good opportunity. I think Circle will be here a very long time. Again, stable coins are only going to get more and more popular. Again, there's a lot of money in that, so that's something to really, really look at. And then the last kind of two I'll go to when it comes to stocks here is going to be Paramount. I've been waiting for Paramount under $9. They actually officially are buying Warner Brothers, which is a big deal. Paramount, they're literally doing a lot of different things. They're partnered with Amazon, live streaming, like they're doing so many things. I think in the back end, their numbers look pretty good. So even if you go here, you go to Paramount, right? And just know, like, Warner Brothers owns a lot of movies. And there's a lot of big movies coming out this year as well, by the way. So just looking at those things are kind of like important to be like, okay, like this is where money is going and they're going to be a part of it. But as you guys can see, is revenue growing overall? No, it's kind of been stagnant in a way. Cool. Has it been growing recently? Kind of almost stagnant, you can say. And then we can go to cash flow. Their cash flow has been going up. Yep, overall. And then recently as well. So this is like a C-rated stock. But the fact that it's so low, like if you look at the opportunity of this, just looking at it as like, price and markets and charts, we literally have Paramount back in the 2008 area right now. So could we see a big opportunity? Yes, I think so. I think the risk reward is there. And the fact that they're big on live streaming and they just buy Warner Brothers, it's honestly a good plus as well. And the last one I'll talk about here is actually called Klarna. As you guys know, Afterpay, and Afterpay is owned by Block, by the way. So if you didn't know that, Afterpay is like the whole, you buy now, pay later type of mentality. I think these things are going to continue to grow. Right now, they're even saying that they're going to have a rent now, pay later, where you can have payment plans for your rent, which is kind of wild. It just literally just creates more debt for people. But they IPO'd at the end of last year, fam, and right now they're super below IPO. I like this, right? I do want to give it some time to show me structure. Like, can it show me structure? I kind of like what it's doing right now. And I don't know. I like this project to be a good opportunity. Just because it's capitalizing on things that most people are going to be using, and is going to get normalized in the markets in the world that we live in. And Klarna could see a good opportunity. I mean, even if it just gets here to all-time highs, which is basically the top of the IPO, $56, so like the opportunity even right now looks pretty good. And the consumption is only going to increase for this as well. So those are things I wanted to talk about. I will talk about that project I told y'all that is they're actually gonna also want to be like a bank. In crypto is Aave. So if you're looking at crypto, Aave is something I've been talking about. They're a sleeper in my opinion. They just had their own app that they have like a wait list for that you can already get. And they're gonna be offering up to 9% interest of your money for just holding it there within the app, which is literally insane because the average bank is not doing that. And they're actually upping the protection as well. A normal bank is 250. I think they're going to be at 1 million now, which is wild. So like they're going to be regulated and all that as well. So again, this is the world that we're living in today. Is we have crypto projects wanting to become like banks, and then we have like banks wanting to like provide crypto. So it's like the worlds are kind of coming together. It's going to be very interesting on the next couple of years how things play out. But right now, how I see it, it's really just, who's going to provide the better things. That's just how I see that at the end of the day. So this is the Aave app I've been talking about. You can earn up to 9% on your savings and a protection up to 1 million. Okay, which is crazy. Nobody's offering that, right? So you gotta, really look at this. I'm not saying to, put all your money in here right now. It's still like in beta mode. So they're still waiting. I mean, it's crazy because like we say, right? Referral-based businesses. You actually earn more rates, a higher rate by referring more people to this. Wild. Because guess what, guys? That's how the economy is going to run. That's the best way for any business to scale is to incentivize referrals. Just to be honest, think about it. It's word of mouth, right? Like you're more likely to download an app somebody told you to download than you looking for an ad. Marketing is changing now. It's not the same like it used to be. And I personally believe that the referral base is only going to increase and is going to incentivize it. So like, look, you refer nobody and you just get on an app, 6.5, not bad. That's actually not bad at all. It's already beating a lot of the banks and a lot of different high yield savings. But if you refer, you can get up to 9%. So I'm not telling you to refer. I'm not going to send my link or anything on here or anything, but I'm just giving you guys this perspective because that's where the economy is really going into. And guess what? Most people do not know about this. Like literally nobody knows about this and knows about the opportunities. Because at the end of the day, you've got to ask yourself this every single day. And that's why we have these investing in crypto calls, trading, crypto and stocks, because you got to ask yourself, what is your money going to do for you? Right? Yes, you want to have a, whatever small savings, whatever it is. But if your money isn't making more money, then you're actually losing money due to inflation. So make sure to look at these things. Obviously, have a smart play. If you're plugged in with the community, if you're not plugged in with Powerhouse, well, you can check us out. We have a community that we've been able to educate so many students when it comes to trading, when it comes to investing, and we've been able to learn through a whole platform of educators that have been in the game for over a decade. That's where myself and John Luke have learned a lot of different things. Obviously, we advanced our learning to have our way of looking at the markets. But one thing that we pride ourselves with is learning from people from a lot of experience. And even to this day, I watch the educators every single week, every single day. I get more informed and get more ahead. And if you don't get ahead, you're going to stay very behind. Okay. So really, that's it I wanted to talk about. Even right now, gold, I personally can see gold as an asset. Can it come a little bit lower? Same thing with silver, guys. I know a lot of people want to look at silver. I don't know. I personally can see silver coming back to giving an opportunity. If that happens, that could be huge. Can we see something like this? Can we see silver, right, come below $60 again, not stay there for a long time, and in 2027 we start to pull crazy up, and something like this, right? I don't know. That's kind of what I like to see. So we'll talk about that on these sessions, silver and gold, as investments as well. But stay very, very stay tuned with things. Remember, news is an excuse. So if war is happening, obviously things are really happening. These are real life things, but at the same time, they're going to be affecting the market. So you got to ask yourself, how is this going to affect the markets, and how can I position myself ahead? Right? How can I get in the game before everybody else is already late to the party and they're actually liquidity? Those are key things to ask yourself really when it comes to investing. But I hope you guys learned something on today's sessions. Just so y'all know, we're running these calls every single Saturday here on YouTube. Right? These are open calls. They're public. They're free. To give you guys an awareness of kind of the things that we're learning here in Powerhouse and what we're doing as a community is only going next level. And if you've already been a part of our community, you saw the new upgrade that we have as a community base. If you do not know about it, check us out. After this video post, I will put our link in the description to see if you qualify as well. But other than that, I appreciate you guys' time. Hope you guys have a great Saturday. Myself and John Luke definitely we'll have some good things planned out for next week as well. And for the coming weeks coming forward. But we're excited to continue to scale this and grow this and help you guys learn this space. And my advice is to invite somebody on this session next week. It will be at the same time, 12 p.m. Central, 1 p.m. Eastern, 10 a.m. PST. And if you're in the UK, I think it's 5 p.m. right now, if I'm not mistaken. But with saying that, I appreciate you guys again. You guys have a good one.